It's Wednesday, the 8th of September 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Sean Aylmer. The Reserve Bank provides an upbeat assessment of the economy, saying COVID has delayed, but not derailed, the economic recovery. That's our main story. Also coming up in today's podcast, Qantas hands out frequent flyer points in an effort to boost vaccination rates. New South Wales Premier Gladys Berejiklian says the state should be ready for mid-October reopening. And the major supermarkets on the lookout for more than 6,000 workers. Then, stay listening for my chat to Jarden, Australia's chief economist, Carlos Cacho, about the economic outlook. But first, here's a brief look at markets. Wall Street reopened after the holiday long weekend, and while tech stocks did well, most other sectors fell back. The Dow Jones Industrial Average was off 0.6%, the S&P 500 was 0.2% lower, while the Nasdaq was up 0.2%. European markets were weaker, with both London's FTSE and the Stoxx Europe 600 off 0.5%. The S&P ASX 200 rose slightly yesterday to finish at 7,530 points. It trended down all day until the Reserve Bank announcement at 2:30 p.m. That provided a boost for equities and the currency. The major banks were lower, with the exception of Westpac, which rose slightly. Macquarie Group was up 0.6% and Telstra was 0.5% higher. The best of the top 20 was Plasma Group CSL, up 1.5%. The best of the big caps was REA Group, up 2.4%, while Aristocrat Leisure rose 1.7%. The gaming machine maker is the second best performer over the past year, up more than 63%. Only building supplies group James Hardie has done better, up 82%. Oil prices were lower overnight, while gold prices fell back below $1,800 an ounce. The Aussie dollar was lower overnight on the back of a stronger greenback and is trading at just under 74 US cents. And the price of iron ore has fallen to a 7-month low of around $132 a tonne after China stepped up efforts to cut steel production. Behind the crackdown are efforts to reduce carbon emissions in the world's second largest economy. Also weighing on the price is increased production levels globally. The price of iron ore has fallen 40% since its peak in May. That sent the share prices of the major iron ore miners much lower, with Fortescue down more than 3% yesterday. It's off more than 30% since the end of July. BHP and Rio Tinto are both down around 20%. The Reserve Bank of Australia expects the economy to bounce back from the current lockdowns along the East Coast, saying the outbreak of the Delta variant of COVID-19 was a delay, but not a derailment, of the economic recovery. The central bank concedes the recovery has been interrupted and economic growth is expected to decline materially during the current quarter, and the unemployment rate will rise. But the impact is uneven, with some regions across the nation facing very difficult conditions and others continuing to grow strongly. As vaccination rates increase further and restrictions are eased, the economy should bounce back, according to the Reserve Bank. However, there is still considerable uncertainty around the timing and pace of the bounce back, and it's likely to be slower than what it was earlier in the year. The bank said the economy will expand again next quarter and be back to its pre-Delta path in the second half of next year. Low interest rates and government spending will continue to support the economy, but the bank is confident enough about the outlook to go ahead with its tapering of bond purchases. It has previously announced it would cut weekly purchases from $5 billion to $4 billion, but given the slowdowns in Victoria and New South Wales, some economists had expected it to reverse that decision. It didn't. They said it would keep buying bonds until February next year. The Reserve Bank reiterated that it didn't think the official cash rate would rise until 2024. So, what's it all mean? It was a fairly upbeat assessment given the extent of the current slowdown in economic activity. Until the Delta variant outbreak, the Reserve Bank had been criticised for being too pessimistic. That's certainly no longer the case. It was almost reassuring to read the governor's comments. Rates are on hold for another 2.5 years, and the economy should bounce back in 2022. All around, good news. In a moment, the rest of the news you need to know this morning. In overseas news, Toyota will spend more than $13 billion over the next decade to develop an improved battery for electric vehicles. Japan's biggest car manufacturer has been a leader in hybrid vehicles, but critics say has fallen behind in electric vehicles. El Salvador became the first country to accept Bitcoin as legal tender overnight. The launch didn't go as hoped, with the digital currency down as much as 17% to $43,000 a unit, after the government had to take its app for storing the digital currency offline due to capacity issues. And while all the signs are that China is slowing, exports rose more than 25% in US dollar terms during August to a record $294 billion. Imports grew 33%, also to a new record level. That happened despite port interruptions and COVID closedowns, and probably reflects buyers bringing forward Christmas orders. Locally, Qantas Chief Executive Alan Joyce said the airline is handing out 15 million frequent flyer points every day as part of its incentive scheme to encourage COVID vaccine uptake. It's issued 220 million points since 23 August. Mr. Joyce said Qantas had created 46 new routes over the last year to avoid state border closures and had done all it could to accelerate the vaccine rollout and position itself for a post-pandemic future. Governments now needed to get on with the job. Mr. Joyce was critical of two states who are taking a more conservative view and departing from the national plan. He didn't name them, but the CEO is clearly talking about Queensland and Western Australia. Mr. Joyce also reiterated that the airline would only allow vaccinated travellers on its international flights when borders open again. And on that point, he said the airline was keen to revisit plans for non-stop services between Sydney and Melbourne and New York and London. New South Wales Premier Gladys Berejiklian said the state's struggling hospitality sector should dust off their COVID safety plans and prepare for a reopening in mid-October as vaccination rates rise. New South Wales reported 1,220 new cases yesterday, the third consecutive day of lower numbers, though the Premier has warned that worse is to come. Ms Berejiklian said reopening in the hospitality sector should mark the end of the statewide lockdowns, adding that only vaccinated people would enjoy greater freedoms. Currently, 41% of eligible adults in the state are fully vaccinated and 74% have had one dose. Across the country, there have been 21.2 million vaccine doses administered. Almost 64% of people over the age of 15 have received one jab and 39% are fully inoculated. About 1 million more doses are needed to reach 70% coverage of first-dose vaccinations. Victorian Premier Daniel Andrews said he wanted up to 300,000 extra Pfizer doses from the new UK allocations to make up for what he says was a secret plan to vaccinate Sydney. Federal Health Minister Greg Hunt responded, saying some people were just looking for a fight. More than 38% of the Victorian adult population is now fully vaccinated and almost 62% have had one jab. The state recorded 241 new cases yesterday, while there were 19 new cases in the ACT. The major supermarkets are on the lookout for new staff, with more than 6,500 current employees at Woolworths, Coles and Aldi in isolation. The supermarkets need staff in distribution centres and stores, with out-of-stock signs mounting in outlets across New South Wales, according to a report in the Financial Review. Supermarket workers are on the front line of the fight against COVID. The lady serving me on the weekend, who is a union rep, estimated that she came into contact with 3,000 people each week. They deserve all the plaudits they get. Meanwhile, Woolworths has sold a 9.9% stake in meal kit company Marley Spoon, but the retailer says it's committed to continuing its 5-year strategic alliance, which covers marketing and customer origination, as well as helping with Marley Spoon's supply chain. Marley Spoon's share price fell 10% yesterday to its lowest level in a year. Women accounted for just 5% of chief executives of ASX 200 companies as at 30 June this year, the same as last year and lower than 2018 and 2019, according to a survey by chief executive women. And there were no females appointed last financial year of top 200 companies, and only one, Cathy O'Connor at oOh!media, in the top 300. Since June, 2 women have been appointed to CEO roles, AMP's Alexis George and Woodside's Meg O'Neill. Chief Executive Women has called for companies to install targets for women in senior leadership roles, with an emphasis on operational roles. Private equity group BGH earlier in the week walked away from its $1.3 billion bid for Hansen. And yesterday, the technology group's boss, Andrew Hansen, said he didn't know why the late-stage talks collapsed. He said during the due diligence process, no red flags or black holes had been identified. BGH had offered $6.50 for each Hansen share. Following the withdrawal of the bid, Hansen's share price tumbled and closed yesterday at $5.82. I mentioned the military coup in Guinea yesterday that has the potential to ruin investments in the West African nation by Rio Tinto, Alumina and Alcoa. But mining companies have been permitted to work through the curfews imposed by the coup leaders, providing some faint hope that the investments won't be impacted. Guinea is a leading miner of bauxite. Bauxite is used in the first stage of the aluminium production process. It's refined to make alumina, which is then smelted at high temperatures to make aluminium metal. That's your lesson for the morning. Defence Minister Peter Dutton has signalled greater access to US missile technology will be a key test of the ANZUS alliance, ahead of an Australian push for unprecedented defence industry cooperation at high-level talks in Washington. According to a report in the Australian newspaper, Mr Dutton said allies needed to pool know-how and resources to develop new long-range strike weapons and offensive cyber capabilities. Inflation expectations have risen to their highest level in 3 years. While consumer confidence has fallen, people think prices are more likely to rise, according to the ANZ Roy Morgan Australian Consumer Confidence Survey. Inflation expectations matter. If people think prices are going to rise, they're more likely to demand wage increases or expect to pay more for groceries and other goods. It becomes a self-fulfilling prophecy. That's why policymakers watch it so closely. Crown Casino's new chair, Ziggy Switkowski, has stepped down from his job as Chancellor of RMIT, just days after the National Tertiary Education Union published a letter saying it was incompatible for him to hold both roles. Mr Switkowski said he wouldn't be able to juggle both jobs. And the Victorian Liberal Party have elected former leader Matthew Guy to head the party, dumping Michael O'Brien with an election 14 months away. It's always a significant move, and it's particularly so right now, given State Premier Daniel Andrews has been harshly criticised for his leadership during the COVID pandemic. Up next is a daily interview, and I'm joined today by Jarden Chief Economist Carlos Cacho. Carlos has a real knack for putting economics into everyday language, so he's the right person to talk about yesterday's meeting of the Reserve Bank Board. We look at what it all means for the coming months, how quickly the economy can recover, and what can derail that recovery. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. It's Wednesday, the 8th of September, 2021. I'm Sean Aylmer, and that was Fear and Greed. Enjoy your day.